Well, Tesla has been in news lately, as well as the AWS strike that's going on right now. I'll cover that later as well. But hey, Tesla is aiming to expand the model range and become the world's biggest car maker by 2030. Hello everybody, and once again welcome to Synonomics. By now you have understood I'm going to talk about Tesla today. Yes, Tesla CEO Elon Musk estimates the company could offer 10 models by the end of the decade, that's 2030, in a bid to sell 20 million cars annually. And that is twice the world's largest car manufacturer, Toyota, recorded last year. Yes, you heard that right. Toyota did record 10 million cars last year, and Tesla wants to double that by 2030. Well, to achieve the bold target, Tesla CEO Musk estimates the company could offer as many as 10 models, and that's pretty much double the 5 vehicles it's offering right now. Just for your memory, just to refresh it, the 5 models it's offering right now is Model S, Model X, Model 3, Model Y, and Semi. Well, right now there are 200 million cars worldwide, and to have 20 million of that, pretty much 10% of the total market share by 2030, would mean that Tesla has to expand 11x the production of this year. So this year Tesla is going to deliver 1.8 million cars, and that's 11x increase by 2030. Guys, the target is difficult to meet, but obviously it's not impossible. Of course, as Musk is planning to have new models, maybe 10 is not good enough, maybe they have to go with slightly more than that. But if they can increase the models, as well as they can set up new factories worldwide, it's pretty possible. It's not an impossible target. Well, if you look at the factories it's having, other than the multiple locations in the US, and now they have announced the battery factory in Nevada. It also has one in Germany and China. It's already in production. It has announced Mexico factory, which will be in production soon. Other than that, Tesla has been talking to Indian authorities. They are going to set up a factory in India with a view to have cars in the price range of $24,000. Yes, you heard that right. The price point is going to come down as well. And by 2030, Tesla wants to bring the price point, of course the lowest model price point, to $20,000. That will be quite affordable for anybody. Other than that, Turkey has invited Elon Musk to set up a factory there, guys. And for some of you, if you don't know, Ford has been there in Turkey for last 100 years. Yes, you got that right. Ford has been there for last 100 years. So, with all these developments taking place in terms of the model as well as the factories, I think achieving 20 million deliveries by 2030 is of course difficult, but not impossible. Well, Tesla has its own advantages, and let's look at some of those. In Q2, Tesla actually reported 466,000 vehicles delivered, with a revenue of 100 billion and a margin which got a little bit hit, 18 to 19% gross margin. The Model Y is its best selling model, and they are going to launch the Cybertruck and the Semi by the end of this year. Well, Tesla, if you look at the market share of the EVs, Tesla leads the pack with 21% market share in the whole world, followed by BYD, the Chinese company, that is at 16.7%, guys. Followed by GSE 6%, Volkswagen 4.7%, and also SAIC. So these are the five guys, these are the five companies in the EV space right now. But guess what? As you heard it right, 3 out of the 5 companies are Chinese. And BYD is kind of the leader in China. It delivered 252,000 vehicles in Q2. Pretty close to Tesla. And it's also growing at something like 95%. Yes, it's growing at a whopping 95%. Having said that, you have to think about it. Now with this situation China is going through, would you like to own a car from China or would you like to own a car from Tesla? Let me know your views in my comment section. I would like to know that. Having said that, all these auto companies are far from Tesla's profitabilities. As I mentioned, Tesla is quite a profitable company. Right now it's at 18 to 19% margin, which has actually declined from 25%. And going forward, basically, many analysts think that it will regain its margin. Tesla is going to announce the Q3 results soon, and many of the analysts actually are calling down the total deliveries Tesla is expected to announce. So, just for information, Tesla is going to announce something like 463K units. But many analysts are actually calling it down. There, some of them are saying 455K, and one of the analysts, basically Pierre Ferrago from the one of the leading research firm, he is even calling it down to 438K. Having said that, guys, for investors like you and me, how does it matter if it's a few K less delivery in one quarter? And this is actually coming on the news that there had been some shutdown in the factories. So how does it matter? 463 versus 455. Maybe some of the crazy investors or institutions will be selling those. If that really happens, probably that will be a great opportunity for us to pick some stocks at a lower price point. Well, when we talk about the same analyst here, Ferrago, he's still expecting like 50% growth in the deliveries in the next few years. 50% growth, guys, year over year. So that means that Tesla is pretty much on its vision of 2030. When it comes to the margin, as we all know, there was a price decline, the price cut to boost the sales and the deliveries, and that's why the margin was hit. Even the analysts think that it will regain its 25% gross margin very soon, in a couple of years. Having said that, Kathy Wood, and I'll talk a little bit more about her, from the ARK investment, she thinks that the margin of Tesla will continuously improve as it gains the scale and the momentum, and it will improve from 20% to 25% to even 50%. Yes, you heard that right. Kathy Wood thinks that the margin can be as high as 50% or even higher over the periods, because the Tesla is actually not an auto company, it's pretty much like a technology company, and the model it has is pretty much like a SaaS model, software as a service. Once Tesla comes out with its FSD, full self-driving software, it's going to commercialize that, guys. Dojo is another one, I'm going to talk about it, and I had a previous video on Dojo especially. So looks like Tesla is pretty much on its journey to hit the target in 2030. Well, let's look at some of the advantages Tesla has today. Number one, as I talked about it, FSD, full self-driving software. That has a huge potential, not only for the autonomous car for Tesla, but it can commercialize that. And that's what the SaaS model we are talking about. Again, Tesla has got some advantages. It has in-house battery production. Yes, right now it's also partnering with Panasonic, but it already has in-house battery production. And as I mentioned, in Nevada factory, they're going to set up a battery production there. Plus some others also in some other countries. Again, Tesla has in-house dealership. That gives extra edge to Tesla. Again, robotization, the dojo that I talked about, is another great thing Tesla is having right now. Coming back to the profitability, I have talked about it, but just reiterate that. Is a car company, $100 billion revenue and a margin of 18 to 19%, which actually came down due to the price cut. And very soon it will regain 20 to 25% margin. Is bound to do that. And as I mentioned earlier, some of the analysts like Cathy Wood thinks it will go even up to 50%, guys. So it's bound to grow. Well, I've talked about some of the kind of a bearish outlook from the delivery perspective of some of the analysts as compared to 463 units forecasted. Some are thinking it will be 455, some are thinking it's 438, but in my personal opinion, doesn't matter. This is Q3. They will pick up something in Q4 as well, and they are pretty much on 1.8 million deliveries by the end of this year. Well, when we are talking about Tesla, let's talk about some other factors. And one of the things that is actually hitting the news everywhere today is the UAW strike. Yes, if you don't know, United Auto Workers strike is going on, and that's a labor strike with the automobile workers in the United States. And that has actually hit the three competition of Tesla: Ford, General Motors, and Stellantis. Well, if you will listen to the demand of these UAW workers, United Auto Workers Association demand, they are looking for 46% pay increase, 4 days a week, 4 days work week, and overtime payment if the number of hours exceed 32 hours. Well, also they are looking at the representation in the electric battery plants, etc. Guys, if you look at the today's auto industry and their margin, look at the price point of the shares of Ford and General Motors. This kind of demand, in my personal opinion, are just a death knell. I mean, 46% price, pay rise, 4 days a week, overtime payment if the number of hours exceed 32 hours. I mean, they must be kidding. Well, let's see how it goes. Well, the great part of that, the good part of that is UAW strike is impacting all the other automakers, but it's not impacting Tesla or Rivian. Yes, you heard that right. Tesla or Rivian, the two EV makers, they don't have these unions. And that's, what does it mean? It means that while the other automakers are actually struggling and thus reducing their production, Tesla and this Rivian, on the other hand, they have an edge. Again, guys, when we talk about the FSD and everybody is bullish about it, full self-driving software, there has been a lot of questions or the doubts, the eyebrows gets raised about the safety. And that safety comes in everybody's mind when we talk about an autonomous car, right? Having said that, Tesla has continuously been experimenting, and they've already achieved more than a million miles in US. And the data that they have today, the real-time data of the traffic, is huge. Dojo, on the other hand, is pretty much in that space, testing this FSD software. Having said that, guys, every year 45,000 deaths in United States and almost 1.35 million deaths worldwide is recorded because of car accidents. Self-driving cars, in fact, are 1,000 times better than the human drivers because of all the sensors and the safety features it has. Having said that, there's still people are a little bit skeptical about it, and there was a big noise that happened. I'm just referring to the one that Florida incident, where there was a death in the autonomous car of Tesla, and that got lots of attention in the news media. Having said that, given the safety features, Tesla cars are 40% safer than the other company cars based on US National Highway Research Institute. Well, I wanted to touch base on that because that comes in everybody's mind when we talk about the autonomous cars. And our discussion will not be complete without the price target, guys. I'm just waiting for the Q3 results, so I will not cover all the revenue and the financials, because in my previous videos you can actually look at that, the financials that Tesla announced. I have covered them in details with full analysis. Well, when you look at the price target has been pretty wide from the range perspective. In the 1 year target, by 2024 or middle of 2025, the target is something around ranges between 400 to almost 800. 600 is kind of very consensus from where it is right now, $250. But there is one analyst as well, I will not name him. His target is $85. Yes, you heard that right, $85, guys. Well, it ranges from $85 to $800. Right now it's sitting at $250, and its all-time high, or 52-week high rather, is almost $315. Well, this is the normal or the group of the analysts, but when we talk about the ARK investment, the perennial big bull, Cathie Woods, she is actually forecasting by 2027 Tesla's share will be worth $2,000. Yes, you heard that right, guys. The bull case is $2,000 and the bear case is $1,400. Well, many of you Tesla owners must be smiling by now. This looks a little bit ambitious, but I will tell you, before 2020, Cathie Wood had actually forecasted that Tesla will be almost at 2,400, 2,500 the next 5 years. And guess what? It's already trading much higher than that right now. Yes, guys, Tesla has gone through 2 splits. First it split 1 to 5, and then last year it split 1 to 3. So one share, if you are holding one share in 2020 January, you must be having 15 shares by now, and one share costs 200. The price is $250. So you just multiply 250 by 15 and you're gonna get your price, $3,750. Yes, much higher than what Cathie Wood had been talking about. So now when she's talking about 2,000 price target, I am not surprised. You know why? Because in her calculation, auto industry is only, or the car industry is only 1/3 of the valuation. So in 2000s is only valuing $600 from the car. The rest of them is coming pretty much from the FSD, from the dojo, from the storage, the power wall Tesla is creating. So basically all this autonomous part of that is forming the 2/3 of that. The whole robotics, FSD, dojo, etc. Well, even I firmly believe that Tesla's current valuation does not include all these, and there is a huge opportunity of revenue and the profitability going forward. Tesla has also proposed energy storage with its power wall. Yes, you heard that right. Tesla is working greatly in the battery space and the power storage space. Robo-taxi platform can be a big revolutionary stuff, rather big revolution I should say, where you can just sit and your robo-taxi can be generating revenue for you. Yes, we are talking about the autonomous transportation, guys. It's an amazing concept. Looks like if the FSD will come to fruition, that's not going to be difficult. Again, Cybertruck, semi, that's going to come out by the end of this financial year or calendar year actually, is another one that's going to be factored in Tesla's price. Other than that, the charging stations, which I have covered earlier as well, and now almost all the companies, all the car companies who are into EV have they actually contracted with Tesla for the charging stations, and Tesla is going to get something like $3 billion annually starting from 2024 for these. Again, talked about the power storage, including the battery, power wall, etc. That's another one. I did talk about the Nevada factory that they are setting up, in-house battery production. That's going to add value in Tesla's share price. Most importantly is the FSD, full self-driving software. That's not only going to improve the autonomous driving for Tesla, it actually gives a huge opportunity to commercialize it. And last but not the least is the dojo. I have covered that in my previous video as well. If you have not listened to that, I'll recommend and request you to go and have a look at that, where I've covered in details what dojo is, what's the value, what does it do, why it's so important for Tesla. Well guys, dojo is a supercomputer that's going to help and test the FSD. And according to one of the analysts from Morgan Stanley, Adam Jonas, he thinks that dojo alone can actually add $500 billion valuation in Tesla's share price. Well, if you don't have Tesla in your portfolio, maybe it's time to rethink about it. Maybe you're missing out big time. Having said that, guys, these are my personal opinion, and don't forget to consult your financial advisor before making any investment decisions. Remember, Synonomics is out there to create financial awareness for you so that you can analyze the company, understand, bring the companies into the circle of competence that Ben Graham talks about, and make money. With that, if you like this kind of content, don't forget to like, share, and subscribe. I'll come back again with another interesting episode for you. Till then, it's a goodbye from your finance coach, Pankaj Sinha. Bye-bye.